Hello everyone, this is Matthew Frailey, founder of BreakpointTrades.com. It's been about a week since I provided you guys with a market update. Again, I've provided many for our subscribers, so if you haven't subscribed, definitely consider doing so, or at least sign up for our free newsletter. Anyway, today was basically a consolidation day for the markets, but as you know, the markets are up very nicely this week. The S&P is up about 2%, while the NASDAQ is up 2.7%. And guys, that is despite everyone was all freaked out and worried last week about the Iran-Israel war. I know a bunch of people went short. And guys, you do not want to be trading news like that. It'll blow up in your face. Follow the charts, trust the charts. They weren't saying we were going to have a big pullback or anything. They were super strong. And the charts were right once again. Anyway, let's go ahead and get back to this newsletter. Again, this is our backend recorder for our website subscription service. I'm going to start that right now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, June 25th newsletter. Hope everyone's having a nice summer so far. It's super hot where I'm at, about at 98 degrees and high humidity. I'm in Illinois, and that's the problem being in Illinois. You know, not by an ocean or anything. We get the high humidity like you would, you know, if you're down in Florida or something like that. And we get the high heat too. Anyway, again, this Wednesday, June 25th, and this is the market newsletter. As you can see, market newsletter is divided into 8 major sections. And again, we're going to cover everything fairly quickly here. We'll first look at the major indexes in a top-down fashion. We'll look at the bond market. We'll examine just a few sector charts. We'll look at commodities. We'll look at currencies, crypto. We'll look at precious metals. And we'll review a few trade ideas. All right, let's go and get started here. First image below, item number 2 is the index sector table, what transpired today and this week so far. Today was a little bifurcation consolidation day. The Dow and the Russell were down, especially the Russell down 1.2%. While the S&P was flat, the NASDAQ was up about 0.2 to 0.3%. Now for the week, solid gains across the board with the S&P up 2%. NASDAQ up 2.7 to 2.8%. And as I discussed last time in my market update on Monday, you know, guys, trade the charts, don't trade the news. In fact, when I was looking on YouTube on the weekend, and there were some fairly big channels with a lot of following, hundreds of thousands of followers, unlike me and my small channel with 40,000 subscribers on YouTube. You know, they were calling about, hey, on Monday, you should buy UCO, that's the crude oil leveraged ETF, buy UVXY. Well, if anyone did that, it blew up in your face, okay? Like I said, follow the charts, trade the charts, do not trade the news, okay? Anyway, solid up week for the week. That said, we are now stretched here in the short term, so we could see a little pullback in the short term, but I'm not looking for a top here or anything, guys. Pullbacks are still buying opportunities. As far as the market sectors, most of the sectors are down today, as you can see. And majority were up this week, except obviously the energy sectors. Those have been getting smashed. Crude oil, energy stocks, not surprising. Remember, they were being bid up on that Mideast conflict, and they've obviously got smashed down afterwards. Currency-wise, US dollar down 0.25%, down 1.2% this week. So the dollar has some positive divergence on the daily, but it really needs to regain the 50-day moving average for any meaningful, or if it's going to try to bottom, but it continues to be super weak. Cryptocurrencies up strongly this week. Bitcoin up 6.8%, up 1.65% today. Ethereum up 9.6% this week. Commodities, again, smashed. DBC down 6.2% for the week. That's largely due to the smash in crude oil, which is down 11.8% for the week. Natural gas down 10.25% for the week. Copper, uranium were up nicely, but again, the index tends to be heavily energy based, so that's down strongly. Plus, again, the DBC, remember you've been looking at my weekly charts, was up at the resistance of the channel. So it got smashed down from a technical level, and of course you have the news. Agriculture has been quite weak this week as well. Corn, wheat, agriculture, coffee, etc. Precious metals, gold down 1% this week, up slightly today. Silver up 0.9% this week, so it's trading a little bit different from gold, not surprising. GDX, the miners, they're down 0.7% for the week. The bond market, nice pullback continues in the 10-year, 30-year Treasury yields. Next, item number 3 shows the economic news calendar. Tomorrow, June 26, we have durable orders, GDP third estimate, initial jobless claims. And on Friday, we have PCE, core PCE, that's inflation data, so we'll see what that looks like. Okay, let's go and jump to the charts. So first chart below, item number 4, here's the daily chart of the SPY. This is our KISS system. Now, I've been showing this lately. This is our standard KISS system where it goes long and has the smart trailing stops. Keeps you in the trend. But this is an experimental version I've been working with here that is a marriage of mean reversion with trend following. So you have your main trend following, and then in the middle of that trend, it can buy additional pullbacks and sell those for trades. And you can catch a lot of nice little winning trades inside a main trend. So you could see here when the system went back long in early April, that pullback in May took a long winning trade, got out, and it took another long recently, a few days ago, last Friday, and it sold that here today. So nice example of this mean reversion marriage with the trend following. By the way, a guy who works for us, Rick Kwan, who many of you may know or spoken to him, he actually used to work for John Bollinger Band. That's the guy who invented Bollinger Bands. And when Rick worked for him, John Bollinger said the holy grail is marrying trend following system with a mean reversion system. And that's kind of what this is. I'm not saying this is holy grail, guys. Again, I'm not that conceited or pompous, but this definitely is that certain concept where you have the trend following from the KISS, and you have your mean reversion inside those main trends. So pretty cool. Again, I'm not ready to release this to the public. I'm still playing around with it. I want to add some filters and stuff like that, but nice to see these trades. Next, image number 5. So here's the 4 time frames with a few of these custom indicators we like to just monitor. ATR, moving average ribbon, etc. So what we got here is, we're above the ATR on all these time frames. Half-day chart, we bounced off the ATR. We had the support cycle. Really like the cycle indicator. We bounced off that. Now, in the shorter term, 130-minute, 78-minute, notice we have resistance cycles up here. So, again, a little resistance area, maybe a little logical area to pull back if the market wants to do so. Next, image number 6. So here's an example also in the past, and I discussed this on Monday. Again, this wasn't on YouTube, but I showed this to our subscribers. So here's a past example of the SPY daily KISS system. Again, you can see the long entry there back in that November time frame. This is way back in 2020. It held that trade for 10 months, essentially until mid-September, about 10 and a half months. So that's nice, catching that main trend. But with this mean reversion component added to the KISS system, notice you'd have had 9 little winning trades inside the main trend. And you finally did have a little loser at the end. The beauty of having the mean reversion trades inside the KISS trade is they have a risk defined. So the risk is, if price goes down and hits the stop of the KISS system, it gets out. All right. So that's a great example. If you had 9 mean reversion winning trades in a row and then one final little loser. So again, many ways someone could play this. Someone could be long the index and maybe play a leveraged ETF on these mean reversions or buy options or something. So a variety or a myriad of possibilities one could do, but just showing you some examples of this, something I'm pretty excited about. But again, it's far from complete, but it is looking promising. Okay, let's go and look back to the standard chart. So chart number 7, here's the daily S&P 500 chart I've been showing for the last couple months. So as you know, we had that big sell-off in February into April 7th where we bottomed. It is essentially an large ABC pullback. Okay, and we've been in the midst of this nested 1 2 1 2 5 wave uptrend. Wave 1 2, then you have smaller degree of wave 1 2 3 4 5. We had that little wave 5, minor wave 5, a couple weeks ago, and we did pull back from there, albeit it was a fairly small pullback, right? Produced a little wave 4, and we're now moving higher. So theoretically, this is this wave 5. We haven't hit the highs, which I do expect us to go to the highs. All right. So no changes here, guys. Notice that pullback was fairly shallow, bounced off that 20-day moving average. Okay. So no changes overall in the chart. Eventually, we should make new all-time highs here. Next, chart number 8, here's the half-day chart, 195-minute. Shows you the same thing, just broken down to a little smaller time frame. Back in early June, I was talking about this coil pattern, broke out. That was another long opportunity. Pulled back a little bit, you know, that little 3-wave pullback the last couple weeks, and we've rallied up. Now, there is a little supply zone right here from that mid-February high. So again, like I said, could be an area to pull back a little bit if it wants to. Otherwise, again, we had some MACD divergence, as you know, at that last high. It produced a pullback, but fairly shallow one. And you can see essentially what happened. The MACD recycled back to 0 and where it found support. Next, chart number 9, here's a 2-hour view, just showing kind of a channel wedge-like. Now, as far as a wedge, there's not much of a slope here. You know, if this was more of a bearish wedge, you would want a steeper slope. So these wedges like this can often result in a break to the upside, which I think eventually will happen. We'll end up breaking to the upside. But right now, we're in the confines of these wedge trend lines. Next, chart number 10, here's 60-minute chart. So again, that little shallow pullback was essentially a little 3-wave ABC that found support right around the 38% fib. So pretty shallow, you know. I was wondering if we get a little deeper wave 4, but it was fairly shallow, and then we've rallied up. Now you can see we got a little rebought, pulled back, but there's no MACD divergence, no RSI divergence, so this could also just try to flag out here. And chart 11, here's a 15-minute view. Here's a little demand zone down here. So if we do pull back a little tomorrow, this could be a potential support. Now, obviously, we have an open gap there, but this would be your first support. Next, moving on to the NASDAQ triple Qs. Here's the triple Qs KISS high performance system. Smart trailing stop is 512.25. That jumped up the other day. System would have taken along back there in early April, so heck of an entry. And this also has this experimental mean reversion component to it. You can see it would have taken a nice trade there in mid-May, closed it out for a nice winning trade, and actually it went long last week on Thursday, and it's still long. So this little additional mean reversion entry that it took, it's still open. Okay. Next, image number 13. Here's the 4 time frames. Again, essentially the same look as those S&P time frames I showed above. Shorter term, we have some resistance cycles up here to monitor. We also have a little DeMark 13 on the 78-minute. Okay. Again, so if we get a pullback from here, that's fine, but it's another buying opportunity ultimately. Next, back to the standard chart, chart number 14. Here's the daily Qs. So on Monday, I showed this as kind of a bull flag here, and this obviously popped up yesterday. And you can see a minor poke to new all-time highs today. Now we have a little black candle doji here, so it is extended, so be aware of that. And we still have this divergence here. All right. The S&P has not yet tagged its all-time highs. Next, chart 15. Here's the 2-hour view I've been showing. So, you know, that pullback also essentially got near the parallel channel that we've been showing where it found support. Next, chart 16, here's the 60-minute view. I showed this little tight channel on Monday for our subscribers. Well, we popped out of there on Tuesday, and it's been a nice move. You can see the little pullback today, but again, to me, it looks like it's trying to flag. It could consolidate a little more here, but ultimately, this should still probably push higher. And chart 17, here's a 15-minute view. Again, similar to the S&P, you have a demand zone down here if it wanted to pull back a little more. All right, moving on. Looking at some of the stocks I've been showing, some of the big cap stocks. So here's NVIDIA, As you know, we've been showing this little wave count, nested 1, 2, 1, 2 for a while that was calling for a new all-time high. Well, you can see it's playing out. Took out this resistance, so we're in this wave 3 of 5 at the moment. Next, number 19, here's Microsoft. Just continues to slowly melt up. I mean, look at these they're little bitty candles here. A lot of little dojis, but they've been just essentially riding the 90 MA up. Now, we do have a pretty good MACD divergence here. But guys, this is why divergence is never a sell signal, because you've had this divergence here for nearly a month. So if you sold just because of the divergence, you just sold weeks ago. All right, so divergence is something to watch, but you always need a trigger. For now, price is strong and just meandering, say just drifting higher essentially. Next, number 20, here's Meta. Had a little flag look I was shown on Monday. It popped out of there on yesterday. Little pullback today. Now we do have a little RSI divergence to be aware of at the moment. And chart number 21, here's AMD. This is actually one of my favorite stocks. They are absolutely kicking Intel's ass, and I wouldn't be surprised if this sucker rallies up to the 200s over time. So I've been adding to my position. I bought it on this breakaway gap from this downtrend line back in May. I added it on this consolidation. I've been slowly adding it on pullbacks. Look at the volume here recently. There's no MACD divergence. Yeah, a little short term, a little get overbought with the RSI, but pullbacks are buying opportunities. And great stuff. By the way, we have this on the KISS systems. I may make a high performance version of this as well, but it's a long-term hold of mine. Next, number 22, Russell 2000. Once again, stalling at this 200-day moving average. You can see it stalled there back in June the first time, pulled back to around the 20-day moving average, rallied up to it again yesterday, then pulling back off of it once again. Chart number 23, here's the 2-hour view. So on the weekend, we showed a coil. We popped out of the coil, pulling back here a little bit. Now we'll see if we can form a higher low, then try to push up again. All right, that does it for those. Let's go ahead and move on to some of these indicators. Here's the CPCE put-call ratio. Again, this isn't in play right now, but if you're just on YouTube, showing you this. So this is another thing, guys. Last week on, I think, Wednesday, this was the CPCE, that's the equity options equity put-call ratio, had spiked way outside its upper Bollinger Bands. And this generally occurs near market bottom. Sometimes it's a day or two early. But when that occurs, that's a fear trade. And the masses are usually wrong. So that's another reason why, it wasn't a good idea to go, into the weekend short just because you were worried about the Iran-Israeli conflict. So anyway, that obviously played out for a trade. Nice winning trade. Produced a bounce in the market. Next, number 25, here's the VIX. So the VIX has been rolling down. Now, one thing I'd watch on the VIX is this lower Bollinger Bands. If it tags that or gets below it, that could set up a VIX Bollinger Band buy signal or a market pullback. So we'll be watching that. Next, number 26, here's the VVIX VIX ratio. So that's the volatility of the VIX to the VIX. And when you plot the ratio with the Bollinger Band, it really gives you amazing signals. I showed this in my previous YouTube videos, but when it gets outside the upper Bollinger Bands, it gives you great sell signals. When it gets below the lower Bollinger Bands, it gives you great buy signals. You can see I had a little sell signal there in early June. And again, it played out for a little pullback in the market. But this is something to watch going forward in the future. And guys, if you're just on YouTube, a reason why you should subscribe to us is because we provide the live chart URLs to charts like this. Whereas if you're just on YouTube, you're just viewing a static image on a video. But if you're a subscriber, you can actually get the dynamic URL that you can pull up in your browser and check it anytime you want. So that's a really good reason to actually be a subscriber to us. Now, that was the daily. Here's a 60-minute version. Okay, so this works on smaller time frames as well. So you can see the other day, June 23rd, when it spiked below its lower Bollinger Bands back here, that actually produced a nice little buy signal on the S&P. You see that? So again, just because when it goes below the bands or above the bands in the lower time frames, I don't automatically buy or sell on that. I try to get a trigger on the price action. So for this here, I would have got a long trigger, say above this. So the candle here where it spiked below, I would have used a horizontal line there and then entered after a confirmation break on this candle. So hopefully that makes sense. But again, very useful tool. Next, looking at the bond market, here's the 10-year Treasury yield. Continues to move down, kind of in this wedge formation. Now it's back around the 200-day moving average. We'll see if it finds any support there or not, or continues lower. Chart 29, here's the weekly view. Of course, remember it's in this huge weekly coil pattern, essentially around the middle of the coil. So it could chop around in this coil for quite a long time before finally breaking it. And chart 30, here's high yield corporate. Little doji today, but this continues to be super strong. Remember the market, this tends to lead. The S&P tends to follow this, and that's another positive for the market, that this continues rallying up. Now if this starts selling off, well then that would have my attention, but for now it's strong. Moving on, look at a few of the sectors, just a few. Here's XLK Technology. Remember it took out those all-time highs, kind of flag look to it. Continues to be strong. There is some divergence here. Remember, divergence is not a sell signal on its own. Chart 32, financials. Been shown in this coil pattern, which broke out yesterday. Chart 33, transports. They've been one of the weaker sectors. They're also in a coil here, haven't broke it yet. Kind of flirting around its 200-day moving average at the moment. Chart 34, home builders. They're also in a coil pattern. They still are having trouble getting going despite the rates pulling back here recently. And of course, energy. Energy XLE got smashed down as did OIH. Not surprising after the Iran-Israeli, the calming down of that. All right, next part of the newsletter, commodities. So here's DBC, guys. This is the DBC ETF. And guys, look at this smash down. Plus, again, it was set up in the charts. It was very extended here. Look at the wide moving average ribbon, overbought RSIs. You had a couple dojis here. That set up for that made it vulnerable to a sell-off. Well, then you got the news and boom, big sell-off. In fact, you could have had a short here by just placing a sell stop right below the low of that doji. But my point I like to make to you guys is, and I've seen this for the last 27 years of doing technical analysis. A lot of people think, oh, well, the market did this because of the news. Well, honestly, generally it sets up in the charts before the news. Then the news comes out and acts as a catalyst. So it was already set up here for a sell-off. Then you get your justification from the news. Okay. Again, that's why you don't trade news, guys. You trade the charts. And here's the weekly chart. Remember, it's been stuck in this coil for rectangle for nearly 3 years. Notice it got to the top of the rectangle. It was at resistance, right? An important area. Well, then your Mideast situation calmed down and boom, you get a smackdown. So it was already at resistance, guys. It was due for a pullback just being at resistance. So it just illustrates my point. Next, chart 38, crude oil, also smashed down. Look at that big ugly candle on Monday. And gap down yesterday. Now it's around this horizontal line. Remember, that was previous important support resistance. So it's now a support. Theoretically, we'll see if it can hold that or not. And of course, the 50-day moving average. Chart 39, natural gas. Got smacked down again. We redrew this coil pattern. It's kind of a larger coil, so I could see this breaking down again, so one thing to watch. Chart 40, URA, uranium has been, as you know, just a monster, just right in the 9 EMA all the way up for the last 3 months. Getting a little overbought here, a little extended. MACD is kind of trying to cross. You can see the RSI has been sky high, but amazing strength in this sector. Chart 41, URA on the monthly. Remember, I've had this target for years, this supply zone going back to 2012. Well, we did tag the underside of that target. That's been a long-term target for many years here, guys. And the uranium major stock, CCJ, Cameco, had this cup and handle, which is obviously playing out. Again, still Still strong here. Any good consolidation here? Remember, this is now big support. The neckline of this cup and handle would be a buying opportunity. Another area I'm interested in is lithium. LIT, this is the global lithium ETF. So far this week, it's up 5.2%. It's tagging this really long downtrend line. So I took a position here. By the way, our KISS system on the website went long. So I'm currently long this. And again, this could be a macro play over time. When it finally breaks this trend line, if you give it room, this sucker could rally up quite a bit over time. Moving to the crypto market, chart 44, Bitcoin. So far, this ABC consolidation I've been labeling looks correct. Still in this little channel, but looks like a three-wave pullback. Chart 45, here's another view of Bitcoin. Remember, we really like these supply-demand zones. And these have also become very popular on the internet the last few years because they're very simple but very effective. The beauty of supply and demand zones, they're not just a simple horizontal line, they're a range. And they're quite powerful. A lot of institutions use them. But anyway, you had a demand zone on Bitcoin, and that's where it bounced off of. Next, chart 46, US dollar. Again, we've been talking about the dollar, this kind of MACD divergence here. But remember, divergence, like I said, is never a buy or sell signal on its own. And quite honestly, if the dollar is going to put it in any possible tradable bottom, it really needs to reclaim this 50-day moving average in red. You can see the last couple rallies stalled right at the 50-day. I have this tight channel to monitor, but for now, it's down, down, down. So we all know the huge fundamental problems the dollar has gotten. I mean, not really going to go into that here. I could talk about that for another 30 minutes. But maybe I should do a podcast eventually and just talk about these other things instead of just the charts. But anyway, down, down, down. That said, I am wondering if it can form a support down somewhere in here. Like I said, the dollar started the supply zone back early January, okay? And it's come all the way down to a demand zone. Now, it's in the upper part of the demand zone. I mean, it could come down into it, but there is potentially some support down in here. And here's the monthly chart. We've had this labeled here for a few years. We had a wave 5 labeled back in 2022, and boy, did that ever prove correct, didn't it? Now, notice the parallel uptrend line, we're nearing it. So that's why I said there's a chance the dollar could try to put in some sort of tradable bottom soon based on the weekly demand, the monthly channel line, the positive divergence on the daily. But again, price action needs to prove that. Next, moving to precious metals, chart 49, here's gold. Slight bounce today. You can see it's right around the 50-day moving average. It's been consolidating here for the last couple months since that April blow-off high at 3,500. Chart 50, here's the ETF GLD. Has a slightly different look, kind of the ascending triangle look. So again, this is either going to, meander and chop around and eventually break out again, or was going to break support. Now, if it really starts breaking down here, if it really loses the 50-day hard, then I think gold goes into a longer consolidation, which would be fine by me because that would allow it to work off some of the weekly overbought. I would like to buy a lot more on a consolidation, but right now I'm kind of wondering how this recent consolidation is going to play out. Next, chart 51, here's gold on the weekly. Like I said, we had that parabolic move up out of that basing pattern that started in early 2024. Hit 3,500, which I'm labeling as a wave 5. Should we make a new high, though, I'd shift the wave 5 over to here. Next, chart 52, silver. That last pullback bounced right off that 20-day moving average today. So yesterday, and then a little bounce up today. Silver has a different pattern than gold. I think silver can move opposite to gold for quite a while. I'm still targeting $50 on silver here eventually, longer term. Next, chart 53, platinum, guys, another new freaking high. Remember, guys, I pounded the table back in March and April and May that I was super bullish on platinum, and this sucker just continues to go. It got quite extended recently with this RSI divergence. But remember, this is a macro play, guys. This could go Longer term, I expect this puppy to go much, much higher. Next, chart 54, here's the weekly. Look at this beautiful move out of the coil. Now, if it does pull back soon, this could form a big cup and handle perhaps. And chart 55, here's platinum on the monthly. So far up 28.5% this month. That is a hell of a move in a metal like this. I mean, look at the gorgeous coil pattern here that we had drawn way before this happened. Longer term, I think platinum could go back to 2000. So again, I had a detailed video about it. Hopefully you guys watched that. And chart 56, GDX, the miners, they've been pulling back a little bit lately. Get some MACD divergence. Now, ultimately, they have some support around the 50-day, but they're just kind of chopping around, struggling. I'm only going to show one precious metal stock. Here's RGLD that I've been showing. It's stuck in this coil pattern. Last bounce stalled at the downtrend line. So still holding this uptrend line for now. All right, last part of the newsletter, our trade ideas. We put out, a dozen or more trade ideas during the week usually. Really nice idea. So here's VSAT. Steve put it out last night in his newsletter. Beautiful pattern, had a flag. Nice pop today. Look at that volume. Now there's a little supply zone here, but great trade. Chart 59, TXG was one I've had on my list on Monday, and it had a beautiful pop here on expanding volume. Nice little tight flag-like pattern, pennant pattern. Next, chart 60, Coherent, another one, little ascending triangle pattern, popped out today on expanding volume. Remember, guys, these are swing ideas. They're not just for a day, though you could certainly day trade them if you wanted to. Chart 61, CRML was a beautiful long idea we had back here a couple weeks ago out of this coil, popped up. I said it still looked good because it was holding the 9 EMA, and it's been starting to push up again. Chart 62, ASTS. Now this thing has just been an absolute monster. We had as a long idea back here in late May, early June out of this falling wedge. And look at this puppy, guys. From a breakout was around 24 bucks, hit $54. Now, it is certainly extremely extended now. Look at how wide the moving average ribbon is. I mean, if anyone still is in this thing, congratulations that you stayed in it this long. I sold it out a while back. But again, if you haven't taken some profits, what's wrong with you? You got to take some damn profits. Chart 63, SNDK, another one that's been moving nicely higher from that trend line break. Chart 64, DNA, one I've been patient with. It broke the coil. I said watch it on the back test of the coil for another long, which it did. I talked about putting a tight stop around that trend line, and it's starting to try to push up again. Honestly, the back test, the breakout and back test are some of your lower risk trades. Chart 65, CBRL was a long idea. I put it in Monday's newsletter. Cracker Barrel, I never eat there. I'm surprised they're still open, quite honestly. But anyway, kind of a cup and handle look. And it's chopping around here. It's above the trend line. If you're in this, decide where you want to put a stop. I could see putting a stop at today's lows or that 56, 58 area for a swing. Chart 66, QTRX was one that broke that trend line a while back for a trade. I said to watch it. It still looks pretty decent here. So I'm going to monitor this, see if it can break this trend line. Chart 67, NBIX, tight little coil here from Steve last night. Still looks very valid. We like those coils because if you bought some now, you could put a tight stop at the bottom of that coil. And chart 68, GH. This would be a long if it could take out that upper trend line. All right, guys, that does it. We'll see what happens tomorrow and the rest of the week. Again, thank everyone for their support. And like I said, if you're just a YouTube subscriber, definitely at least consider checking us out on Breakpoint. At least take our free newsletter, or if you decide to sign up, our best subscription is our 6-month membership. We also have the KISS subscription. All right, guys, that'll do it. Thank you, and we'll see what happens the rest of the week. Take care.